Hey everyone, how you doing today? Hopefully everyone's having a great time. And today is Monday. Means another great live that we're going to be having. Today we have Yoav with lending, talking all about lending today, and I can't wait to have him. He's a good friend of mine. I meet him all over at the meetups, and so for all of you out there, anybody who has any questions, whether it be about lending or real estate in general, go ahead and put them in the chat. We'll see if we can get them answered for you. But in the meantime, let me bring in Yoav. Yoav, how you doing today?
Hey, good evening. Doing well. How are you?
Oh, I'm doing great, doing great. So, I first off, I want to say thank you for coming on here with me. All right, and thank you for, uh, sharing your knowledge with, all the people that I have in our community, as well as this is streaming to my YouTube channel, Randy Steadwell on YouTube. So if you're not already subscribed, go ahead and subscribe. And it was horrible, but whatever. So, um, anyways, with that being said, hopefully I introduced you right. What's the name of your lending company? I couldn't remember it. I didn't want to butcher it. So,
Thank you, Randy, for having me, first of all. The name of the company is Greenblock, and we're at www.greenblockinc, that's inc.com.
awesome. I really appreciate it. That's really great. Now, you guys do a mixture of hard money. Do you do private money as well? Like, tell me
Yeah,
about what all you guys do as well.
sure. So we started out as hard money lenders. When somebody approached us for a loan, we didn't even know if we could lend or not, if it was legal.
Yep.
Talked to a few lawyers, turned out it was, and started out just doing hard money. Now we've kind of transitioned into more long-term loans as well. So we're still
Okay.
doing the original short term for fix and flips, but also doing 30-year fixed rate stuff as well now.
Okay, so you guys are pretty much almost a one-stop shop at the moment.
Yeah.
So when you get your hard money lender from here and you want to refinance and get into the longer term stuff, you just go straight to the.
Exactly. We have a lot of clients actually who do just that. They find a
Okay.
property that has a value add proposition. So they come to us
Hmm.
for the short term, and then we just refinance them into 30-year debt, and they put a renter in there, and it's really convenient for them.
Now, what kind of, I mean, we can get probably a little bit further into it a little bit later, but what do you see as far as the structure of, how things are going right now with the market with the interest rates the way they are? So I know that's a big, tall, and ask. We could
Yeah.
just cover just a little bit of it right now, and then we'll go a little bit deeper into it a little bit later.
Sure. So I'm sure most of your viewers know that rates have just been going up and up and up and up over the last few months. I think it started in March of this year.
Yep.
They've kind of paused briefly, but we think there are a couple of rate hikes still in the works, and so we're just kind of waiting. And the market is also shifting in lending, but I'll get into that
Okay.
later.
Okay, that's awesome. So what, all right, now I want to kind of know your origin story a little bit. So we're in the beginning of the show, and I kind of like to do a little bit like a beginning, middle, and end and future. I don't want to say end because it's never the end.
Right.
So or beginning, middle, future. So uh, tell me where you got started, how you got started into real estate. Obviously this probably wasn't your first career, and you
Right.
probably didn't come across this, out of the womb like this. So tell me your origin story.
Yeah, I'm so going way, way back, probably more info than your viewers want. But I've always been a car guy, and no matter what I did, I wanted to somehow relate it to cars. Um, got a bachelor's degree and uh, basically I took an economics class and loved it, which had nothing to do with cars, kind of strangely. And so I stuck with it and graduated after like 7 or 8 majors. But it wasn't really my passion. Cars were my passion.
Gotcha.
And so I decided to go back and get another bachelor's degree, this time for car design. And so I went back, got a second degree, and became a car designer, which was awesome. And I loved
Okay.
it. While I was going to school to become a car designer, I was living in Los Angeles at the time, and it was before the Great Recession. And so property values were just going crazy. And so I decided to buy a condominium. And I wound up house hacking before it was a thing. I rented the second bedroom to a classmate with a no doc loan, which was awesome because I was a
Okay.
student and wouldn't have qualified.
Yeah.
Right? Turned that into a single family, 3 bed, rented 2 bedrooms. And then I graduated, and the Great Recession happened, and it was terrible and all that. But managed to hold on to that property and another property that I'd bought in Venice Beach at the time.
Okay.
Wound up selling that house, the one that I was living in, moved to Venice Beach. Uh, Basically, to make a long story epic, met my wife. She wanted to start a flipping business because she wasn't in love with her job. And so I
Okay.
was like, go for it. I have a job. We're doing well. So she did
Yeah.
that. When we were ready to sell the Venice place, she wound up rehabbing it. And that's kind of how we got her start. Um, we ended up buying some properties through the tax sale here in Michigan, totally
Okay.
coincidentally. Never knew that we would live here, and flipped them from California while we were still there. Never
Okay.
saw them, never held the keys. And it went well. I wound up getting a job here again, coincidentally, wound up moving. We never had a flip go wrong until we were actually living here, which was kind of a surprise. But one day, to get to the meat of the story, somebody approached us for a private loan. And as I said earlier, we didn't know if it was legal, if we could do it,
Right.
what the options were. And fortunately, it was a pretty small loan, so not too much risk. But we were advised that we could absolutely do it. And, kind of these were the terms we needed. And, this was the usury rate, and don't go above that. So we wrote a loan, and then we wrote another one, and it kind of snowballed.
Yeah.
And that's kind of what got me here today.
Wow. That's awesome.
So I
So
don't know if that was too much background. So
no, no, no. That was perfect. That was perfect. So now you said you're a car guy, all
yeah,
right?
absolutely.
And I work in the automotive industry, so you already know this. So I actually used to work for a classic car dealership too a long time ago. So that was pretty cool. That's my fame, I guess you can call it. I got to drive all these cool classic cars, things that I could never afford. So, you know, at least at that time, I will be
Right.
able to afford them. So, now with that being said, what brought you guys to Detroit? Just coincidentally, you got a job here?
Yeah.
Like, were
So
you guys looking?
not at all. So after being a designer for a few years, I got a little bit bored of sketching all day long. It wasn't bad. I kind of like trying new things, and
Yep.
started a blog. And the blog did pretty well, and I wound up getting hired as an automotive journalist.
Mm.
Um, and eventually, it led me to be the digital managing editor for Haggerty. And for those who don't know,
Ah.
Haggerty's a big classic car insurance based in
Yep.
Traverse City, but they have a huge media arm also. And so I got
Hmm.
hired to run their online content, which was awesome. And yeah, so that's what brought us here. And as you said, like working with classic cars was amazing because I got to drive some stuff that I wouldn't have otherwise had the opportunity to at the
Yep.
time. So it was a great gig, and I loved it. But yeah, the business was doing really well, and it was an opportunity. So
Well, that's awesome. I'm really glad to hear that. And so, how does Michigan compare to Venice Beach?
uh, The weather's a bit better in Venice, but
Just a bit.
I don't know. There's less crime in Ann Arbor, at least where I live,
Yeah.
and people are friendly in Venice, but it's not always necessarily genuine. Although I made a lot of great friends there, just as I have in Michigan. So I don't know.
Yep.
I've liked both places.
Oh, that's awesome.
Yeah,
I have to rat on it a little bit, so being
absolutely.
California at all. So, at least we get all four seasons, right?
There you go.
You know. So, now like, so you said you got it started in lending as far as by giving a private money loan and to, was it a friend of yours?
No, it
Well,
was just somebody that we met through the RIAs,
okay.
and and with every kind of experience, you get either a profit or a lesson, an education. And in
Yep.
this case, our first loan wound up, or our first client wound up defaulting.
Oh, wow.
Fortunately, yeah, fortunately the loan wasn't too big, so the first few loans we made a few mistakes, but we learned from them and kept going.
Just like any true wholesale deal, honestly.
Yeah,
So, um, now, how did you, so you said your wife wanted to do some fix and flipping from California
right.
all the way out here. How did you guys manage those flips from California to here? You have a good crew? I mean,
Yeah.
tell me about that experience.
I think that, I mean, you hit it on the head. I think that we got part of it was luck. We had a
Yep.
great crew working, and so I think that I'd love to say, oh well, I did it all. I picked the right people and the right contractors and all that. But the
Yeah.
truth is that there was a lot of luck involved. I think we did pick good people, and we still work with them in some capacity today.
Hmm.
So it was great, but I think a lot of it was just luck and perseverance and talking to a lot of people and kind of getting the right feeling.
Oh, most definitely. So, I'm glad that, uh, I'm glad that you had some good experiences with that. A lot of people, they just like your first lending, they have to learn the lessons on those first deals. So it really, it really does hurt somebody coming in when they have to learn on the first one, and it discourages them from going to the second, third, and fourth, and kind of continuing on. So, with all that being said, like, how did you go from the default on the first lending to where you are now?
I think that you kind of have to have relatively deep pockets when you're starting out because you are going to make mistakes. The key is being able to bounce back. So to answer your question directly, it was a really small loan. Basically, they were doing Airbnb arbitrage, and
Okay.
uh, and they suggested the interest rate, which was really high, which,
Hmm.
to be honest, is what attracted us.
Right.
But they mismanaged it, and it all fell apart. And so,
Yep.
um, the loan wasn't even collateralized. But yeah, I mean, it was a really it was $10,000, so it was a really small loan, and
Gotcha.
not that 10,000 is nothing, but I think most investors can survive something like that and walk away and write
Yeah.
another loan. So
Yeah. I mean, if you're getting into it as a lender, $10,000 is not a lot of money for a lender.
right.
So, and that's where I want to say $10,000 is a lot of money. Don't get me wrong to anybody. But if you're getting into the lending business, that's relatively small. So,
Yeah,
um, that's really cool. And I just want to take a quick shout out to, my buddy Gary Corbin. It doesn't show his name in here because he's on the group, but he just wanted to say hi to both of us. So,
hey Gary.
um, I now he does a lot of fix and flips in the Detroit area. So, um, and now, how did you get more traction with the lending business? Was it just word of mouth?
Yeah, we
Did you advertise?
Yeah, so we've actually never spent a dollar on marketing or advertising. It's all been word of mouth.
Hmm.
As you and probably many of your viewers know, I'm fairly active on Facebook,
Yep.
replying to comments and answering questions. Um, I think to start out, people have to trust you and trust your name. And
Yep.
so just, paying for advertising to me didn't seem like the right way to go. I like to get out there and meet people and hear their stories and what they need so that I can serve them
Hmm.
better and give them good service. But yeah, we've never spent a dollar on advertising, and that may change in the near future, but we'll see.
Yeah, most definitely. I completely agree with you on that. You got to put a face to the name to be able to trust them. And I go to a lot of the RIAs around town here, and I always see you. So
Yeah.
it's always a good thing when you have a presence in the area where you want to be. Now, do you do currently? Do you do a lot of flips or any flips at all, or is it just lending?
So we haven't done a flip, I think, since either 2019 or 2020. We're not averse to them, but
Hmm.
except for, I would say, rentals or investment properties that we can hold long term, we're not actively looking for deals. We've also narrowed our
Okay.
geography quite a bit, so we're only looking in a couple of really specific areas that we like.
Okay. Only certain area. Like what areas are those that you do like?
We like Ypsi Township a lot. Um,
Okay.
we like Ypsi too, but the taxes are higher in Ypsi. Um, so
Gotcha.
yeah, we like areas that are kind of geographically convenient to us.
Okay.
We used to
Awesome.
be Yeah, we used to buy all over Michigan, and we still have rentals all over Michigan. But at the end of the day, if you can get the cash flow that you're looking for and it's close to you, then why not? And so we're pretty much focused on Ypsi Township right now.
Yeah, and Gary is asking any particular areas in Detroit, and if so, why?
We still lend in Detroit, but we haven't bought in Detroit in a long time. So I'm probably not the
Okay.
best person to ask. I really, really like the University District, but
Okay.
everybody likes the University District. Um, yeah,
Brings
so
in money.
yeah, exactly. It's expensive and it's solid and
Yep.
isn't transitional in any way. So I think there's a lot of, I don't know if value anymore, but it's solid.
Hmm.
So
Yeah. Most definitely, and I completely agree with you on that. But would so what else are you doing as far as your lending? Are you seeing a lot of people, what are you seeing other investors doing with your lending at this moment because of
uh,
the whole interest rates and, are you seeing slowdown? Are you seeing, some others pick back up? What is it you're seeing?
we were really, really strong through October. This month has been a little bit slower, and so I'm kind of
Mhm.
curious if the market is shifting, and that's both 30 years and then the short term stuff as well. But we are still getting a lot of inquiries.
Okay.
And so I think it's too early to tell. It could just be that, our regular clients are working on stuff and they'll be back soon because we did just cash out a few people and they're looking to do a bunch of stuff. And so it could just be the cycle of the individuals that we work with right now. But yeah, I mean, in terms of business, we're doing more this year than we did last year. So it's
Oh,
too
that's
early to
awesome.
tell. Yeah, yeah.
Yeah, at least you're doing more this year. Maybe this month is a little slow, but
Right.
it's around the holidays, so you never know.
Yep, exactly.
Um, so, one person from YouTube actually had a question. What products does Greenblock offer? What type of
Uh,
products?
yeah, I can run through the list.
Yeah.
We do, let's see, starting with transactional loans, and that's something typically for wholesalers where like they're doing A to B and A to B. Sorry, they're doing A to B deals, and so we come
Yep.
in the middle to fund the A, and then they pay us
Hmm.
off with the B. So
Right.
transactional loans are normally just a day. Uh,
Hmm.
let's see, we do bridge loans, so like cash outs, short term on a property you already own, maybe to do light rehab, something like that. Obviously, fix and flips, they're kind of our bread and butter. Um, what else? We also do 30-year loans
Okay.
on rentals. We do 30-year loans on Airbnbs.
Yep.
We used to, until recently, do 30 years on 5 to 8 units, and then just normal commercial loans on 8 plus or 9 plus.
Yep.
So basically, with the exception of like HELOCs, home equity lines of credit, we can do most things that a conventional bank can do, except we're
Hmm.
either doing them for 1 or 2 years or 30 years. There's no product in the middle right now.
Now, do you primarily, for investors, do you primarily go by credit base or do you primarily do asset based lending or do you do
Uh,
both?
We do both. So we
Okay.
primarily go off of the asset, but we
Okay.
do run credit checks, and
Hmm.
unfortunately, we've found that the clients that have defaulted, and we've only had three as of now, over our
Hmm.
whole 6 year history. Um, they tend to have poorer credit, and so
Yep.
if your credit's not great, work on your credit, show that you can make the payments you need to make, and we would love to work with you.
Now, this is comes from Elad over on Facebook. Uh, can your company work? Can your company works with non-U.S. citizens for loans?
Hi, Lad. Thank you for the question. Yes, we do. We've done it. We can work with foreign nationals. The only requirements are that you have a US based entity and that you have a bank account in the US tied to that entity.
Gotcha. Okay. So, speaking of that, make sure you have your LLCs intact. So,
Yeah. Yeah, we can
you
only
know,
lend to entities.
gotcha. And want to say Kevin Beam over at over on YouTube here. Thanks for joining us here.
You.
Want to say thanks for our time. I appreciate it. So, and then this is actually from Gary again as well. We are just waiting to on the right buy. Kind of scary to end upside down. Can't take the risks that you could in 2019 and 20.
Yeah.
So I completely agree with that. So it 100%,
Yeah.
on that. So, and then he also asked, what's your minimum credit score loan? Important for future buyers to work on their credit scores. So again, if you're not buying right now and you need to work on your credit score for lenders, this is the time to do it.
Yep.
So
Yeah.
100%.
And with regard to the changes in rates, it's affected lending in every way. It's not just the rates that are going up, but lending is tightening. And what that means is that LTVs are coming down, and the requirements from borrowers is going up. So we used to lend down at one point to a 590 middle credit score, and then it
Hmm.
creeped up to 620, and now it's all the way up to 650 middle FICO. So
Oh, wow.
yeah, it's definitely getting tougher to get a loan, and it's basically
Hmm.
because nobody wants to end up holding your bad project or something like that. So we're just
Oh,
being a
most
lot more,
definitely.
yeah, I mean, we're just being a lot more conservative with our loans.
Yeah, 100%. This Fugi TV, you really need to change your name on there, by the way. But is there a seasoning period for like cash out refinancing, or delayed financing on an option? Do you have any of that?
Yeah, so our seasoning period, if for to write a 30-year, for instance, if you used short-term hard money or something along those lines, the seasoning period is 3 months. If you paid cash, the seasoning period is 6 months.
Mhm.
And then we can do a delayed purchase up to 6 months.
Gotcha. Okay. And then Mohammed actually said, do you have a minimum or maximum for your loans on a single family homes? For instance, we get a lot of Detroit homes that are 20 grand, things like
Right.
that. And what are your LTV ratios?
Sure. So to answer your first question, our minimum loan amount is $50,000. However, having said that, the minimum as is value of the property needs to be at least $100,000, which unfortunately
Okay.
does exclude a lot of Detroit and Metro Detroit properties.
That's
For some reason, we get a lot of inquiries about Inkster. I don't know what is
okay.
going on in Inkster, but people seem to really want properties there lately. But yeah, a lot of the properties are like 30, 40, $50,000, and we simply can't do that. And then to answer
Yeah.
your, sorry, go ahead.
No, go ahead. Yeah,
Oh, okay.
continue.
So to answer your second question, LTV really depends on the type of loan because it's different from short term versus long term, as well as your experience and credit score.
Mhm.
But our typical LTV on a short term loan is 85% of purchase and 100% of rehab through draws. And on a
Okay.
long-term loan, on a purchase, it's 80%. On a refi, just rate and term is 75, and on a cash out, it's 70.
Okay. So on a cash out refi, usually you're sticking to that 70% right now.
That's right.
Just because is it because of the interest rates, or did you always do that?
No, our cash out refis used to be 75%, but
Yep.
we recently dropped it to 70 again, just because of risk increasing. We actually believe prices will either hold steady, although I think that's a long shot, or will actually decline next year towards the end of the year in particular.
Yeah. If in my opinion, if you want to go year over year, they will decline.
Yeah,
If you want to go, uh, you know, from right now where we're at, I think that they're going to stay steady.
Hmm.
So, for instance, if you go year over year from April and March, 100% decline.
Right.
Uh, then if you go to say next November, year over year, I think they're going to stay roughly a lot closer to being steady. May go a
Okay.
little bit down, but I think it'll be closer. I think right now is where we're at the curvature. We're not coming up yet. We're still at
Right.
the it'll fluctuate a little bit. you know,
Totally.
Again, just my personal opinion. you know, it
Likewise.
all de- and it all depends on where the Fed goes. If the Fed wants to still do more, huge hike rates continuously, then it will just continue to go down.
Right.
But it all depends on where we're at right now. So
Totally.
um, yeah, so definitely Gary was saying the 70% LTV is pretty low. It was 85 a little while ago. So any early payoff penalties on a 30 year?
Yes, but it's a step down, 5 year step down. So year one, 5% of the loan amount, year two, 4%, so on and so forth. Year five is
Mhm.
1%.
Okay. So it's not really too bad. Maybe by the time you get to a 15 year, then it doesn't really go against you.
Right. I mean, after 5 years, there's no prepayment penalty. So,
I gotcha. Okay.
yeah.
Yeah, that sounds great. So, yeah, that's really not bad. I don't think anybody's gonna be paying it off within 5 years, anyways. In my opinion, even if you have the ability to pay it off, um, as long as you have a decent interest rate, use the money that you have towards something to make you a little bit more money. So,
Right. And if a
yeah,
couple of points, are making or breaking your decision to refinance, then it's probably really thin anyway and not worth
yep,
refinancing.
exactly. So, and that's 100%. I agree with you on that. So, what are people coming to you right now and asking for, like, what are you guys thinking about for the future? Okay. I know that you had a deal, a syndication deal down south, an apartment deal that you guys had, where you were leading the syndication, correct? You weren't.
Uh,
Um,
yeah. So we
okay.
got brought into that by a group called Premium Cashflow Capital.
Okay.
You can find them online. I think it's premiumcashflow.com or premiumcashflowcapital.com. And they're great to work with, the three guys in there. So we got brought in to provide part of the EMD, to also sign on the
Yep.
loan, and also to raise funds.
Hmm.
And we managed to close the deal and lock the rate way before all this started happening. I think we closed in June, and we got like
Oh,
a
wow.
yeah, we got like a 4% rate, and so it's performing and going fine. I would be lying, however, if I didn't say that I'm not a little bit worried about the refinance in a few years. But
Hmm.
who knows what February 2023 will hold, let alone 2025. So we'll
Yeah.
cross that bridge when we come to it.
No, 100%. I honestly think rates will stay steady for a couple years, to what they are a little bit right now, and then come down just a little bit. So,
I think you're right.
unfortunately, people don't realize that they're so used to those low twos and threes that we've always been at a 4 or 5%, 6% interest rate.
Yeah.
So I mean, 4% is that, to me, that's a killer deal. So, I have, it's just really crazy. But um, before we move on, real quick, Mohammed had just a quick question. With good credit, what are your typical rates like? And how many points do you usually charge? And I'm assuming he's talking hard money. So, give us with somebody who's experienced and then a beginner.
Yeah, well, I can give you the whole spread on
Yeah.
short-term loans for like a fix and flip, a bridge, whatever. Currently, our rates are from 10 and 3/4 to 12 and 3/4. That's percent per year, with three
Hmm.
points at close.
Okay.
So if you have a ton of experience, great credit, you're talking about 10 and 3/4. If you've never done this before and your credit is 651, 12 and 3/4. On the long term stuff, our base rate is currently 6.8%. And we actually let you choose how many points you want to pay at close on the long term stuff. That's,
Okay.
again, 30-year fixed rate from 1 to 4 points. So the 6.8% base rate is with 4 points. If you only want to pay 1 point, that's fine, but that's about 7.5% right now.
Yeah. So you're basically buying down your rate a little bit.
Exactly.
So
Yep.
yeah. Okay. Yeah, that's totally awesome. Some people like it, some people don't, and the fact that you give the option to do that, I think is really nice. So,
Yeah.
um, how many new, you know, how many new fix and flippers and things like that do you get coming to you that are looking for, like, hey, I need this hard money loan to be able to fix and flip this property and so on and so forth, and uh, they are like skinning by the skin of their teeth here, so they're like, what is your experience with new people? Let me guess ask it that
So
way.
yeah, we work with new people frequently. I would say about half of our loans are to just brand new investors, and it's
Okay.
always great because we've gotten to the point where I think we can kind of tell who's doing it right or who's going to do it right and who isn't, who might have some more trouble than others.
Yep.
Basically, it comes down to organization and preparation, getting your team
Hmm.
together before you actually start doing the work. Um, just being ready for the whole experience, the whole whirlwind. Um,
Yeah.
but to answer your question, And actually, I apologize. I forgot your question.
So I guess what was your experience, and I think you've already answered it,
Oh, okay.
was
Yeah.
with new people coming in
Yeah.
and doing this. Like, how are you judging from like what rates to give them and
Right.
how much of a risk they are, you know?
Gotcha. We also request proof of reserves, so cash in the bank, because although we do fund the rehab through draws, we don't want people to have no money if they discover something they didn't anticipate, like, oh, we didn't do a sewer scope, and it turns out the sewer line out front is bad, and we have to redo the sewer all the way to the street. There's
Yeah.
25,000. So we want to make sure that you do have funds. And if somebody is spending every last penny just to do the deal, we
Hmm.
we will not lend, most likely, just because it's too great of a risk, not only for us but for them too. Um, you gotta
So
be able to stay in the game, like I said. So we don't want
yeah,
somebody to just get knocked out. It's got to be
yeah.
win-win always.
Most definitely. And one thing I do have to add, I do want to ask is this, you always see out there where you can get into a property for zero down, okay? And you can start these rehabs for zero down. And I know how they do that. And how they do that is they go to somebody like you. They say, okay, you need 20% down. Okay, here's your hard money lender. Here's your hard money loan. We'll, give you 100% of the rehab. We'll give you 80% of the cost, or whatever it might be, whatever you might have to come up with.
Right.
And then they'll go to a private money lender, okay, and say, hey, I'll give you 8, 10% on that and borrow the money from there.
Right.
Some lenders have an issue with that. And so my question to you is do you guys have an issue with that? Or, like, I know you want to see funds in the bank,
Right.
as far as being able to do that, that's perfectly fine. Somebody can have the funds in the bank and still want to do zero into the deal.
Sure.
So do you have an issue with bringing in a private lender to do the down payment?
We do,
Okay.
because we think that it adds to the risk. Uh,
Yep.
if the other lender won't put a lien on the property, then we're open to discussing it. But the bottom line
Okay.
is, we don't want a second position. We will never write into a second position, but we also don't want anybody else to have a second position. And part of
Okay.
that comes from a bad experience that we had lending to somebody who defaulted,
Hmm.
and had actually secretly taken a first position a day before, or had given first position to another lender a day before we
Hmm.
closed the deal. Um,
Gotcha.
so so they registered the mortgage with the county, and then the
Hmm.
following day we funded it, our portion, which we thought was the only portion, and so we got second
Yep.
position. Now, part of the paperwork that we have in our package is an affidavit that states that you don't have another loan on the property.
Mm.
So we were able to get out of it intact, because the title company basically had to cough up the money. But yeah,
Yep.
we want to be the only ones invited to the party. So
Gotcha. Now, for the case that I'm talking about is that private money lender would always be a second position. You would always be the first position. But
still won't
you're
do it.
saying what you're saying is you don't want anybody being in second position because there's too high of a risk at that
It,
moment.
it's the risk, but it also just adds more work because we have to be sure that
Yeah.
the other lenders also getting paid, and that they're not
Yep.
gonna foreclose before we do if we had to. So
Gotcha. Then how do you do it with no money into it? I'm just kidding.
no
Hey,
worries.
there's a lot of people out here on YouTube preaching, get into the deal, no money, no money, no money. And if you've done 10 deals, that's easily done. Okay. You have lenders that will definitely do that, and private money lenders that are doing that. But in my opinion, your first deal, your first few deals, you should never do that because you never know what's going to happen. If you have nothing in the deal, now all of a sudden you get overloaded because
Yep.
now you're taking money out of your own pocket and you're going to default on everybody, you know? So
Yep.
it's really, I'm, as much as I don't like to put out money, I'm still a corporate of, okay, your first few deals, you have to put out something so that you have skin in the game, you
Yeah,
know?
and to be perfectly transparent, we have done deals where we fund 100%. But to
Mhm.
also be perfectly transparent, those deals were all with people we have done at least 10 to 15 deals with.
Okay,
We would just never do that with a novice or somebody we hadn't worked with before.
exactly. So, with that being said, wanted to ask you how long to close on a 30-year loan? Is it a typical 30 days, 40 days, 45
Uh,
days?
it's usually shorter than all of those. We do require an appraisal, but once we get the
Mhm.
appraisal we close in 2 weeks.
Oh, wow, that's actually really fast.
Yeah.
So, um, yeah, that's for a 30-year mortgage, that is really fast. Um, you know, and then so Kyle said, what about a zero down deal with a much higher interest rate and money in the bank? And I'll probably answer this. Probably that's probably going to be a no, and I'll let Yoav answer that.
Yeah, so there's a saying or a cliche that oh man, that's a buildup, and I forgot it now. Of course, basically, you know, you wanna make interest, but you're more interested in your principal, in the principal coming back. So
Yeah,
it's awesome. You can offer me 50%, and it might be a sweetheart deal, but I'd rather make my 10% and know that it's coming back and only put out 85% of the value than take the risk that, oh, whoops, well, we didn't plan for this, and now I get zero back. So
exactly. So this is my advice to anybody who wants to have zero in the deal. In my opinion, if you're new at it and you want zero in the deal, there's only one way that you should be doing it. Okay. And that is partnering up with somebody who has experience. Okay. Where they can bring in the down payment. You get the loan, they bring in the down payment. Now you have zero in the deal and you're running the project.
yeah, we did
Okay.
a deal like
And you,
that once. Oh,
yeah.
sorry. I was just going to say.
And you split the fees 50-50, by the way. That's all I want to add.
So yeah,
So,
we did a deal exactly like that, where not only did we bring the money and they did the work, uh, but we didn't charge interest. It was just, as you said, 50-50 at
oh,
the end.
yes.
So yeah.
Yep. And that's where you can becoming a good wholesaler and you find these deals and you find these people to partner up with. That's where it'll help you because now you'll take this nice golden ticket that you have here that you may not want to wholesale and do it yourself. So I will get there one day. I have had things come across, but you know, it will happen. So, and
Most
anybody who
definitely.
does want to partner with me, by all means, I've done many wholesale deals. I haven't done a fix and flip yet. I'm open to anybody who wants to work with me. I'll do the work. I'll make sure the crew is doing all the work and doing all that. You want to put down the money? I'm happy to do business with you. Just putting it out there into the universe. That's all. So,
Nice.
you know, now so you have how many? eh, Do you see a lot of people doing that partnerships up, and where one will bring the funds and do the work, and like you just said with the deal you guys did?
Yeah, we have a client that we've done probably about 20 loans with over, I think, like 2 or 3 years. She's
Hmm.
super active, and it's awesome. I mean, it's crazy. I mean, she started out and she's like, I want to own rentals one day, and she was just flipping, and now I think she has like 30 rentals, 40. I don't even know. But she works with us
Wow.
pretty regularly. but she also
Okay.
has people that she partners with. And, when I find out about it, it kind of makes me sad, but that's the name of the
Yeah.
game. Like whatever works. I
Yep.
realize that our money works in some situations and other people's works in others. And so
Yep.
it's just awesome to see her success.
Oh, 100%. And then I just wanted, Fugi asked, do you provide proof of funds letters?
Absolutely.
So, okay, that's awesome. I knew the answer to that, but I wanted you to answer that. So,
Yeah, we do.
because for off-market stuff, I don't really have to provide proof of funds
Right.
to people. Being off-market, it's very rare. Usually when I'm dealing with a an old realtor or something like that who used to be a realtor, then I gotta deal something with that. But for the most part, most of my off market stuff, I don't have to deal with proof of funds letters.
Yeah.
So that's good to know that you at least provide that. And in order to get that, do you have to go through getting qualified and do all that, or?
It really depends on the situation, but typically, yes. We also
Okay.
do pre-approvals. We didn't used to. We only did proof of funds. But to
Mhm.
do, for instance, kind of a blanket pre-approval, we like to know what type of properties you're looking at so we can see the price range.
Mhm.
We like to know the reserves that you have on hand, and we do run credit to make sure that if we put our name on it, that your credit's not going to come back 450 and oops, well now we can't do it. So
Exactly. So, and that's 100% understandable. So hopefully the people out there do understand that. So the people who are new to this, keep in mind they do have to run your credit. They do have to run through all of this. They don't just hand you proof of funds letter. There are places out there, if you just need a proof of funds letter, just at wholesale or anything like that, there are places out there that do that. Okay. Um, but at the same point, I hope that if you're trying to get a proof of funds letter from Yoav, you're actually looking to get a loan from him, to be honest.
yeah.
So I really think that you should be doing that. Now, Kevin, he was asking about what's the minimum projected profit necessary to split in a partnership or a JV deal?
Uh, well, so we used to provide free deal analysis, and
Okay.
we'll look at anybody's deal and consider it on its own merits. I think if it's a $3 million deal, the profit margin needs to be a little lower than if it's a $30,000 deal. Um, so there's the consideration of just the pure dollar amount related to the
Yes.
deal, but kind of as a blanket, we like to see at least 10%. That's
Hmm.
also how we underwrite our loans. If we underwrite and we see that your profit margin is going to be 5% on a $100,000 deal, we probably won't approve the loan just because 5% on 100,000 is $5,000. You can make that much in 3 or 4 months working at McDonald's.
Hmm.
So what's the point of flipping a house? Like I
Exactly.
said, it's got to be win-win, and so we usually use the 10% line to say yes or no, but there are exceptions.
And and that's the thing. This is where I think you guys, as the bank, comes in handy because you are looking. Everyone has. I like to call them beer goggles. Okay, they're so they see this big fat deal. They think it's a huge fat deal, and then they wake up in the morning and it's not as good as they thought. So it really, you got to get away from that. You got to look at it with fresh pair of eyes, and it helps having a second pair of eyes who knows the business. I'm looking at it and saying, I don't think this is a good deal. So, are you really sure you want to go this? Okay, even if you are, we're not the lenders for you.
Yeah,
You know, um, and I respect that because that gets me thinking as the investor. Do I have beer goggles? you know?
Totally.
So, now you're talking about your pre-approvals. How long does your pre-approvals last? Three
Uh,
months?
3 months. Yes, exactly.
3 months? Okay. I only know that just because when I got my pre-approval through the bank, when my personal home, that's how long that lasted.
Yeah.
So,
And it
you
has
know,
to do actually with credit. So sorry, I just
yeah,
bumped the camera.
no, that's
Yep.
all right. So yeah, because your credit changes constantly.
Yep.
So, no, I completely understand that. As far as a JV partnership, back to Kevin Beam's, question, JV partnerships, keep in mind, you're going to do it, in my opinion, you should be 50-50. Okay. Because if you're bringing the credit and they're bringing the down payment, even though their payment is lower, they're bringing the cash. Okay. And, you can't do one without the other.
Right.
Okay. So you need a 50-50 partnership. That way, that one is not overtaking the other or anything like that. But you need to know, each partner needs to know, this is my role, this is your role. If you don't have that laid out, it's not going to go anywhere. Okay. You're
Yeah.
going to have issues with the partnership. Okay. Speaking from experience, I had a partner, did not work out. So,
Um,
so with that being said, it has to be worth your while in order to do that. Okay. So think of what, don't think of just to get the experience, minimum profit is 30 grand. Okay. If your minimum profit is 30 grand, the total profit has to be 60 grand because you're making 50%.
yep.
So keep that in mind. Um, you know, now with Yoav, what do you see going to the future, next few years, with your company? And where are you looking into doing other avenues of lending, or like, tell me what's the next step for you guys?
So it's a great question. It's something that we're very, very actively working on right now. And I'd love to hear from the audience what their thoughts are. Basically, there are three employees right now. Me, my wife, who started the company, and an assistant. And so, what I would like to know is if we start growing and that's what we want to do. I think we really enjoy the space that we're in and doing residential lending. We've
Mhm.
considered commercial as well. But for us, the question is if we grow, and to be again perfectly transparent, we would like to be the Rocket Mortgage of private lending, and we have a
Gotcha.
very, very long way to go. But if we did start growing, and you were talking to, say, loan officers for Greenblock who are doing private slash hard money loans, would it be the same as if you're talking to the CEO and the whatever my title is, chief strategist? Is it the same as dealing with the people that are running the business? Would that make you maybe go somewhere else, or is money money? Does it not matter if you have a relationship? I'd love to know what your thoughts are.
Oh, so Tara said, first off, no, be better than Rocket. So I will say this is Rocket Mortgage, the thing I hate about them is you are talking to someone different all the time.
Right.
At every step of the stay, you're talking to someone new. And one person's opinion versus the other person's opinion, oh my God, I hate it. So um, make sure it's one person's talking to. I mean, you guys, I don't think have an issue with that.
Right.
One person throughout the beginning and the end for the loan. So whatever it is, um, you know, who put this? So Larry Shepard put out there. I like lenders that offer traditional and DCSR loans. I'm assuming loans. So, um, so I think that's what you guys do right now, right?
No, we don't do traditional loans. We cannot
Oh,
lend
okay.
on like your primary residence or anything like that. It's all non-QM. Uh,
Okay.
Yeah, so I mean, we're just lending to investors' entities We don't lend to
Gotcha.
individuals ever. Yeah, so
Now, is that something that you guys may get into later on? Is doing some traditional lending?
I think
Yeah.
potentially, yes, but I think that the non-traditional side of things would have to grow tremendously for that to happen.
Gotcha. Okay. Now, quick question on that, because now we're consider the traditional side versus the investor side. From a lender's aspect, what is different, and why is there a huge like? Why is it that you can't just all of a sudden do a traditional loan versus an investor loan? So, is there like uh, an association you have to be a part of, or government oversight, or anything like that?
So it's different from state to state, but the bottom line is that the traditional lending space is much more tightly regulated, and there are a lot more things that you have to. There are a lot more compliance issues,
Hmm.
and it's something that we simply don't want to have to deal with because probably there are only three of us working right now.
Yep.
So if we had to have somebody who's making sure that every box is checked and every little I is dotted and all that. I
Yep.
don't think that we could handle it. So we have to kind of pick and choose our niche, and our niche happens to be private lending for the moment.
Gotcha.
Yeah. So
Duh, 100%. I just didn't know that myself, honestly.
it,
So, like, I knew it was tightly regulated. I just didn't know. So, ideally, your company could do traditional lending, but they just have to be scrutinize everything.
yeah, I
And
think yeah. Just to give an example, if you're doing, I think the number's like 100 or more loans a year in the traditional space, you have to file all kinds of stuff with
mhm,
regulatory agencies, uh,
gotcha.
and it's not worth it for us.
Gotcha. Yeah. So it's a lot more oversight through the government, and not saying it's not worth it. Not saying it's not there by any means. That's what people do, and we all need traditional mortgages.
Absolutely.
Um, so I'm glad that you're sticking to the investor safe so that you can help us. So thank you. And, and so my question to you is what advice would you give to a new investor who's looking to start off either doing fix and flips, doing even wholesalers that need bridge loans for double closings or anything like that? What's the best way? I want to say get on your good side and to get a good loan from you. Send you some chocolates or anything like
There you
that.
go. I love pizza.
There you go.
Uh, yeah, I don't know. Be as detailed as you can. I mean, sometimes we get inquiries that have a person's first name and their email and nothing else. So it doesn't even say like how much money they need or what project they're working on. And I look at it, and of course I follow up an email asking for more details. But if you're serious and you would like me to give you tens or hundreds of thousands of dollars to buy an investment, I mean,
Mhm.
like try to show up a little bit at a minimum, because people that do that typically don't even respond, and so they're just kind of wasting my time. I guess it's like with everybody else, nobody likes to have their time wasted. So if you're serious,
Yep.
be serious, like make it meaningful, and
Yep.
try to anticipate some of the questions that I might ask, which are really the questions that you should have already figured out by the time you call me. Like, what are you going to do to the property? What does it need? What are you paying? Who's your title company, ideally? And that one's a
Mhm.
little maybe down the road, but try to figure out
Yeah.
what needs to be done. And yeah, that would be awesome.
So now I have a question, or not a question. I have a suggestion for people in the audience. If you're going to be going to Yoav and getting a loan or any loan officer, I'm going to tell you, you need to underwrite the property yourself. Okay. And in order to do that, instead of just doing it and guessing and this and that, what I would say is Google Sheets is free. Make a Google Sheets. Okay. Do a Google Sheets. It's Excel. Okay. Same thing as Excel. So go from there. And what you want to do is list your property, list what the value you think it is at right now. Okay. What the value you think it is after your renovation, how much the renovation budget is. And the renovation budget, I want you to break down on where you're going to put that in, what you're going to be putting in. That will help you understand what needs to go in there. And then from there, list out your comps. Type out the addresses. Okay. Don't just think, oh yeah, maybe I can use this comp, this comp. No, type out all the addresses, whatever's closest to you. That way you can give it to somebody else, say another investor, and say, can you underwrite this for me? Can you look at this? Do you think I'm missing anything before you take it to Yoav, Yoav, and get declined for the loan and get a hard, get a hard uh, ding on your credit or anything like that. So, what do you think about doing something like that?
Yeah, that sounds awesome. I think that we all want to appear to be experts at everything, and I myself am the same way. Like I hate realizing how much I don't know, but I don't know a lot. And so
Mm-hmm.
I think typically it's better to go and ask people who know more than I do what they think. And so, like for instance, with the multifamily that we did earlier this year, like I know a little
Mm-hmm.
bit. Pardon the cliche, just enough to be dangerous. So I shared it with
Yeah.
other people, got their opinions, because if you're going to do this and you want to make money, you got to get it right. So don't be arrogant. Don't assume you know everything. Put in an hour or two to go to Home Depot and ask questions about costs or like, what's the range on remodeling a kitchen?
Mm-hmm.
Go to a couple of RIAs and have people underwrite it, as you said, Randy. Like it
Yeah.
really helps you. I mean, it'll help us too if we're going to fund the loan, but more
Mm-hmm.
than anything, it helps the person who does it because they'll learn and then they'll know for the
Yeah.
next time, and it'll just become easier with more practice.
And most definitely, if you're doing that on a consistent basis, whether you miss out on deals because you took too long to do that, at least you're getting practice at doing that.
Yep.
Okay. And so by all means, it's 100% worth doing. So, I definitely recommend. Now, David, someone asked the question that we had before, and I just want to answer it for him real quick. For hard to find loans under 100K, I completely understand. But you also asked, what is the minimum that you have, and I believe the minimum loan is 50K, but
Correct.
the LTV of the house has to be at least 100K or above. Is that
Yeah,
correct?
the as is value needs to be 100,000 or more.
Correct. Okay. So keep that in mind. He may not be your lender for that. There are other lenders that do provide that. Or you put a bigger chunk down. So,
Yep, I know.
whatever the case may be. So, um, we also had, so Larry Shepard also said that you can pay the money for a Bigger Pockets Pro account. They do have they have lenders, they have investors and stuff like that. But I think they also have it on the free one. I don't know that for sure because I don't really use it, but they do have a rehab estimator on the Bigger
Yeah, they
Pockets.
do. And
Yeah,
yeah, I think
so
you can download it.
yeah, it's very useful. Now I don't use it myself, but it's very useful to use if you need to do that. So 100% use all the tools that you can. Whether they're free or paid, it's up to you. I'm not going to tell anybody how to spend their money. So, let's see, David Pollard, you said he uses Deal Check and it's free up to 10 properties. So I'm assuming it's maybe an iPhone app or some sort of app, things like that. So, it's like a website, dealcheck.io. So that's awesome. Now, Diana from there said, would you be open to having people referring or brokering loans to your company?
Yes,
Just,
certainly.
yeah,
Yeah, we do that, and we're willing to put the broker fees on the HUD statement, and
hmm
ensure you get paid what it is you want to get paid. And yeah, absolutely.
awesome. Now, as a wholesaler, do you count any wholesale deals that I've done towards any
Hmm.
work? Like, for instance, if I come to you for a fix and flip or anything like that, do you count any wholesale deals that I've done towards experience?
I've never had that question asked. Um,
There's a first for everything.
yeah, I think we'd have to, again, take it on a case by case basis. In your
Okay,
case, yes, we probably would. Um,
awesome.
but yeah, I don't know. I guess the question is, how big is the ask and how risky does it seem?
Gotcha. Most definitely, 100%. Figured I'd ask. If you don't ask, you don't know.
There you go.
So, that's my biggest fear of doing a fix and flip at the moment, is because I get all these higher rates because I'm a beginner and I haven't done a fix and flip yet. Um, and so because of that, my rate's always going to be higher, pay the most amount of points, and so on
Right.
and so forth. So I've always been looking for private money in order to do that. But in order for me to actually do that, it has to be a smoking deal, in order to get me away from wholesaling for a little while, in
Right.
order to compensate for that. So, you know, um, now, have you done any wholesaling yourself?
Oh man, we did one deal up in Flint like 3 or 4 years ago.
hmm
Yeah, that it wasn't really wholesaling in that it was a property that we acquired and held briefly, but I mean, basically from day one, we were trying to offload it,
hmm
and we wound up doing the whole thing off market. I mean, from the acquisition to the sale, it's just that we held it for I think about a month rather than doing an A to B. So
So you essentially did a wholesale
yeah,
without the
kind
market
of.
part.
Yeah,
Yeah.
I think we were just really bad at wholesaling, and it took us longer. It took us longer to offload it. So
Gotcha. Okay. You know, now,
it happens.
and I guess what happens to the deals that you need to get rid of? Now, for instance, they default on, or you have a lender that, or not a lender, you have a client that gets in too high over his head or anything like that, and he's going to default or anything like that. What is your steps for stepping in or anything like that?
So I mean, a lot of it comes down to communication, and when
hmm
we're happy to try to extend the loan or do what needs to be done beforehand. Foreclosure is
Okay.
a worst case scenario in lending.
hmm
Sometimes it works out, other times the client just is either too proud or doesn't do what they have to do to make the situation go away, make us whole, and just be done with the project.
hmm
And in those situations, the only option really is foreclosure, and then we basically sell the property typically. Um, if
Gotcha.
we since our LTVs are relatively high, it
hmm
doesn't provide a lot of value when we retake a property. And just to be clear, we've only had one foreclosure since 2018.
hmm
Um, and that matters to me because number one, it means we're underwriting deals well, and number two, it
Gotcha.
means that we're helping create win-win situations when we lend. Um,
Yep.
but yeah, I mean, we don't want to foreclose. It sucks for everybody. The three that we've gone through from start to finish, we broke even on two of them, and we lost about 50% on one. And then we have
Hmm.
one ongoing right now that if somebody wants to buy, I'm happy to share the address. But
Yeah.
it is 274 East Lafayette in Romeo, Michigan. It is a
Okay.
light industrial commercial space. It's on
Hmm.
the second floor, and it's part of like a 3-unit condo of light
Okay.
industrial. But yeah, we're basically selling it, or we're selling the note at the moment for the amount we're owed, and it will be ours on January 8th, I think. Um,
Okay.
and we would rather not retake it. If they do redeem, then if someone buys the note, they get the amount owed, which is what they would pay us, plus
Yep.
12% since July. And if the property doesn't get redeemed, then they get the property.
Yep. 100%. So that's awesome. Now, with knowing that, since you put that out there to everybody, how do people get a hold of you?
You can call me. My direct number is 734-210-2828. That's my cell phone. Again,
Hmm.
734-210-2828. Or email me, which is usually more reliable. And my email is I'll spell it Gilad,
Hmm.
at green, like the color, block, like a block of wood, Inc., INC, incorporated.com. So Gilad at greenblockinc.com.
Awesome. So that's really good. Honestly, anybody out there who's looking for a loan, short term, long term, for an investment property, I recommend going with Yoav. I haven't, full disclosure, I haven't done any deals with him, but he's a good friend of mine, and just from the way he presents himself and he underwrites deals, I definitely think that he's a great person to get in business with. So so I highly recommend him. With that being said, what do you think is going to be for the future of Green Block? Like we said before, you were looking for some feedback. So if you do have a little bit more feedback from that, email him or text him directly.
Please.
And he asked the questions. He wants to hear from you. So by all means, you know. So now, if you are watching us on our Facebook channel, okay, on our Facebook group, Metro Detroit Off Market Real Estate Group. Thank you. I really appreciate it. Most of you are watching us from there. So the whole reason I started this. We also have a YouTube channel. It's on YouTube at Randy Steadwell, and just search me on there. We're on there. I'm constantly posting clips from prior lives. I'll be posting clips from this live as well. If you want to do shorter term content, if you don't want to sit here for the whole hour and 13 minutes so far we've been here, just chit chatting about real estate.
Yeah.
So go ahead and go over there. Now, I'm happy to work with anybody out there, cold call or, get on seller calls with you, JV with you, anything like that. I'm here helping new wholesalers get into the business, as well as anybody wants to talk real estate. I'm always open to talk real estate. So, whether it be wholesaling, whether it not be wholesaling, it don't matter to me. you know. Um, with that being said, I really, really appreciate y'all coming on here. Do you have any questions directly towards my audience that you haven't already asked, or towards me?
No, I just the one that I asked earlier. I
Awesome.
really appreciate you having me. Thank you for the time, and yeah, uh, I'd love to be in touch with some of your viewers and answer their questions and help in any way that I can.
Most definitely, most definitely. So what we'll do here is Yoav, I'm going to put you down here, you know, so we're going to say goodbye to Yoav. Just stay here for a moment. I'll talk to you afterwards. So, all right. And, and so everyone out there, I really appreciate it. This one's a little bit of a short one here today, but you know, by all means, reach out to me. This is my number. My email is scrolling here, randybuyshousesmi@gmail.com. You know, hit me up. I'd be happy to work with you. I'll give you my opinion. I'm listening to my buyers. That's what I'm doing. You know, and I'm also, if you are a buyer, hit me up, you know, so you can get added to my buyers list as well. And I want to hear feedback from people, and I want to build relationships with people. That's what I'm here for. You know, as well as to learn and teach all of you guys what we can and can't do for each other. This group, I love in the chat here where some people's helping out each other. It's great. That's what I strive for this group, and that's what I strive for what I'm doing here. So thank you, everyone. Hope you have a great Monday evening, and let's all do some deals together. Thank you.